Welcome back to Explain the Charts, everyone. Today, September 16th, 2025, we're doing an in-depth analysis of Apple, ticker symbol Apple, a stock that has seen significant volatility due to a mix of recent news and product announcements. Let's start by looking at the broader market context and recent news. Just 7 days ago, around September 9th, Apple unveiled its highly anticipated iPhone 17 lineup, the Apple Watch Series 11, and new AirPods. However, the market's reaction was far from enthusiastic. Investors and analysts perceived these new devices as offering only incremental upgrades, lacking the revolutionary breakthroughs typically expected from Apple. This sell-the-news event, compounded by many features being leaked beforehand, resulted in Apple shares sliding, with declines ranging from 1.5% to 3.3% in the days following the event. If we look at the daily chart, we can clearly see this sharp downturn starting around the September 9th candle, characterized by a significant bearish move. Before this negative sentiment, Apple experienced a positive surge. Around September 2nd, the stock gained 2.6% due to a favorable court ruling ordering competitor Google to share some of its search data, a development seen as highly beneficial for Apple's ambitions in competitive AI chatbots and search tools. Observe the bullish candle on the chart on September 2nd, reflecting this news-driven rally. This highlights how quickly market sentiment can shift based on both product cycles and broader industry developments, especially in the tech sector. Now, let's zoom out to the full daily chart to get a clearer picture of AAPL's long-term trends, focusing on price levels that indicate potential support and resistance. Despite the recent dips, Apple reached a 52-week high of $259.02 in December 2024, demonstrating its strong historical performance and investor confidence at that time. Since the beginning of 2025, Apple is reported to be down 7.1%, though our chart data shows a rebound in recent days. The current trading price, according to our latest daily candle, is $236.70, which is slightly above some news reports of $226.57, a notable discrepancy to be aware of. This general downtrend from its 52-week high, interspersed with significant rallies, paints a picture of a stock navigating considerable market forces. Looking closer at the daily chart, we can identify key support and resistance levels. The news reports mention technical consolidation between $226 and $234, which is evident in the recent price action post-iPhone 17 event. We can see the stock struggling to break above this range after the initial sell-off. Initial resistance for any upward movement is identified around $241.30, a level that has proven difficult to breach in prior rallies. On the downside, key support levels are noted at $222, corresponding with the 50-day exponential moving average, and stronger support at $216, where the 200-day EMA likely resides, both crucial for preventing further declines. Now, let's transition to the 1-hour chart to examine the intraday movements during these critical periods with finer detail. Here, we can observe the swiftness of the sell-the-news reaction following the iPhone 17 event. Notice the sharp decline in the hourly candles on September 9th and 10th, reflecting the rapid liquidation by disappointed investors. Conversely, the dramatic bullish candle on September 2nd, around 2000 hours Universal Time Coordinated, vividly illustrates the immediate positive response to the Google court ruling, showing significant buying pressure flooding into the market during that hour. Delving even deeper, the 15-minute chart provides granular insight into the recent trading week. After the initial iPhone 17-related drop, we see some stabilization and recovery. The candles on September 11th and 12th show a gradual, yet determined, upward trend as some investors likely saw the dip as a buying opportunity or short-term traders covered their positions. This intricate dance between short-term buying and selling pressure around the $226 to $234 range perfectly illustrates the market's indecision and the ongoing consolidation. So, what are the reasons to be bullish or bearish on Apple? Long-term bullish arguments include Apple's strong balance sheet, record cash flow, ongoing talks with Google to integrate Gemini AI into Siri by 2026, and analyst predictions for a strong global upgrade cycle from over 315 million iPhone users who haven't upgraded in 4 years. Additionally, increased iPhone Fold shipment forecasts and accelerated automation in their supply chain could improve efficiency and future profitability. However, the short-term outlook presents bearish concerns. The underwhelming iPhone 17 reveal, Apple's perceived lag in the generative AI race compared to peers like NVIDIA, market saturation in mobile, and concerns about company margins due to tariff-related cost increases. These factors could keep the stock under pressure in the immediate future, making a retest of lower support levels plausible. For traders, closely monitoring the $226 to $234 consolidation range is crucial. A sustained break above $234, ideally on higher volume, could signal a bullish reversal, targeting the resistance at $241.30. and potentially leading to a retest of its 52-week high of $259.02 in the midterm. Conversely, a decisive break below $226 would indicate further bearish momentum, potentially pushing the price down to test the stronger support levels at the 50-day EMA around $222, and then the 200-day EMA at $216. Volume spikes accompanying these breaks will be key indicators of conviction. The RSI at 59, noted in some reports, suggests neutral to bullish momentum, hinting at underlying strength despite recent pullbacks. To recap, the immediate future for Apple involves navigating the post-iPhone 17 skepticism. Important price levels to watch are the current consolidation range of $226 to $234, resistance at $241.30, and support at $222 and $216. A move above $234 with conviction has about a 60% likelihood in the short term, reinforced if upcoming news around iPhone Fold or AI integration talks with Google proves more definitive and positive. A downside break below $226 is also plausible, with a 40% likelihood, especially if more negative sentiment emerges regarding AI strategy or market demand. Traders should closely monitor official announcements regarding AI integration and early iPhone 17 sales data, as these will be critical catalysts for confirming either a bullish breakout or a bearish continuation. Thank you for joining Explain the Charts, and we'll see you in the next one.